Imagine it's 1998, and you're living in Russia. The country has just been through a period of hope, a time when it seemed like things were finally looking up after the collapse of the Soviet Union. But then, out of nowhere, the ruble, Russia's currency, crashes. The government defaults on its debt, and suddenly, everything is in chaos. This is the story of the Russian financial crisis of 1998, a story of how a nation went from the brink of recovery to the depths of despair almost overnight. Let's rewind a bit to understand how Russia got to this point. After the Soviet Union dissolved in 1991, Russia was in a bad place. The economy was in shambles, the government was struggling to find its footing, and people were just trying to survive. But by the mid-90s, things started to improve, at least on the surface. The inflation rate, which had been sky-high, finally began to stabilize. Foreign investors started to show interest in Russia again, and there was a sense that maybe, just maybe, things would get better. But beneath this fragile calm, there were serious problems. Russia's economy was like a house of cards, built on shaky foundations. For one thing, productivity was declining. Factories were outdated, infrastructure was crumbling, and the economy was heavily dependent on oil and gas exports. And then there was the government's financial situation. Russia was running huge deficits, spending way more than it was bringing in. To cover the gap, they borrowed heavily, both from foreign lenders and by issuing short-term government bonds known as GKOs. These bonds offered sky-high interest rates, which attracted investors, but it was a ticking time bomb. And then there was the war in Chechnya, which was draining resources and further destabilizing the region. All these factors combined to create a situation that was just waiting to explode. So what exactly caused the crisis? There wasn't just one reason, but rather a combination of factors that together created the perfect storm. First, there was the issue of declining productivity. Russia's economy was still struggling to transition from a centrally planned system to a market economy. Many industries were inefficient and there wasn't much innovation happening. This made it hard for Russia to compete on the global stage. Then, there was the exchange rate. The Russian government had pegged the ruble to the US dollar to try and keep inflation under control. But this meant that when the ruble came under pressure, the central bank had to burn through its foreign reserves to defend it. And with Russia's economy so dependent on oil exports, when oil prices dropped in 1997, it put even more pressure on the ruble. Financial imprudence was another major factor. The government was borrowing like there was no tomorrow, issuing those high-interest GKOs that were essentially a Ponzi scheme. They were borrowing more money to pay off the old debt, but eventually, this became unsustainable. The fiscal deficit was also a huge problem. The government was spending way more than it was bringing in, partly because of the war in Chechnya, which was costing Russia millions of dollars a day. And when the Asian financial crisis hit in 1997, it sent shockwaves through the global economy, further destabilizing Russia's fragile financial system. The crisis officially began on August 17, 1998, but the warning signs had been there for months. Investors were getting nervous, and capital was fleeing the country. The central bank tried to stem the tide by hiking interest rates to 150%, but it was too little, too late. On that fateful day in August, the Russian government announced that it was devaluing the ruble, defaulting on its domestic debt, and imposing a 90-day moratorium on foreign debt payments. The ruble's value plummeted, and within a month, it had lost 2/3 of its value against the US dollar. People's savings were wiped out almost overnight, and the banking system was on the brink of collapse. The government and central bank were scrambling to contain the damage, but their efforts were largely ineffective. The ruble continued to slide, and by September, the central bank had abandoned its defense of the currency altogether. The ruble was now floating freely, and its value was determined by the market, which was a disaster for Russia. The impact of the crisis on Russia was devastating. The economy contracted sharply, and inflation, which had been brought under control, surged again. The Russian people, who had already endured so much hardship in the 90s, were plunged back into poverty. Unemployment soared, and those who still had jobs found that their wages were worth a fraction of what they had been before the crisis. But the impact wasn't limited to Russia. The crisis sent shockwaves through neighboring countries, many of which were also struggling with their own economic problems. Ukraine and Moldova defaulted on their debts in the wake of the Russian crisis, and other countries in the region saw their economies take a hit as well. The crisis highlighted just how interconnected the economies of the former Soviet states were and how vulnerable they were to each other's problems. By the end of 1998, inflation in Russia had soared to a staggering 84%. Prices skyrocketed and the cost of living surged, placing an unbearable strain on ordinary Russians. The soaring inflation wiped out savings and made it difficult for people to afford basic necessities. Banks, unable to withstand the financial pressures, began to crumble. Major institutions like Incombank and Tokobank were among the casualties, shutting down and leaving depositors in financial limbo. The banking sector was hit particularly hard. Even international financial giants were not immune to the chaos. For instance, Bankers Trust, which had heavily invested in Russian government bonds, suffered major losses during the summer of 1998. The crisis nearly drove the bank to collapse, but it was ultimately acquired by Deutsche Bank for $10 billion in November of the same year. This acquisition catapulted Deutsche Bank to the position of the fourth largest money management firm globally. Russia's agriculture sector, which was already struggling, saw a dramatic reduction in federal subsidies, an 80% drop in real terms compared to 1997. This cutback severely hampered the sector's ability to function, contributing to widespread economic hardship, especially in rural areas. The financial collapse quickly spiraled into a political crisis. President Boris Yeltsin, whose popularity was already waning, found himself under increasing pressure. Crisis emboldened opposition forces in parliament, leading to a showdown over the country's leadership. On August 23, 1998, Yeltsin dismissed Prime Minister Sergei Kiriyenko and attempted to reinstall Viktor Chernomyrdin, a move that sparked fierce resistance in the legislature. After the Duma rejected Chernomyrdin's candidacy twice, Yeltsin was forced to nominate Foreign Minister Yevgeny Primakov. Primakov, seen as a stabilizing figure, was approved by the Duma on September 11, 1998, restoring some measure of political stability. His government prioritized the payment of wages and pensions, addressing one of the most pressing concerns for ordinary Russians. On October 7, 1998, the Communist Party and the Federation of Independent Trade Unions of Russia staged a nationwide strike, demanding Yeltsin's resignation. Just 2 days later, on October 9th, Russia, grappling with a poor harvest and economic chaos, appealed for international humanitarian aid, including food, to stave off a full-blown humanitarian disaster. Yet despite the severity of the crisis, Russia's economy began to recover with surprising speed. Several factors contributed to this unexpected turnaround. The most significant was the rapid increase in world oil prices during 1999 to 2000, which allowed Russia to run a substantial trade surplus. Additionally, the devaluation of the ruble made imported goods prohibitively expensive, giving a much-needed boost to domestic industries like food processing. Moreover, Russia's economy, heavily reliant on barter and other non-monetary forms of exchange, was less vulnerable to the collapse of the banking system than it might have been otherwise. As businesses managed to pay off debts, including back wages and taxes, consumer demand for domestically produced goods and services began to rise, further fueling the recovery. While the crisis was devastating, it also had some positive effects. James Cook, the senior vice president of the U.S. Russia Investment Fund, pointed out that the crisis taught Russian bankers the importance of diversifying their assets, a lesson that would have long-term benefits for the financial sector. Economist Anders Osland argued that the 1998 financial crisis provided a crucial push towards a real market economy in Russia and other post-Soviet states, which until then had only been slowly and partially liberalized. In Romania, for instance, the crisis spurred the first major privatizations, including the sale of a state-owned bank in late 1998. So, what can we learn from the Russian financial crisis of 1998? One of the key lessons is the importance of sound economic management. Russia's crisis was largely self-inflicted, caused by a combination of financial imprudence, poor policy choices, and a failure to address underlying structural problems in the economy. Another lesson is the danger of relying too heavily on short-term borrowing to finance long-term spending. The Russian government's reliance on high-interest GKOs was a ticking time bomb, and when investors lost confidence, the entire system collapsed. Finally, the crisis underscores the importance of maintaining investor confidence. Once confidence is lost, it can be incredibly difficult to restore. and the consequences can be devastating, as Russia learned the hard way. In the end, the Russian financial crisis of 1998 was a turning point, a period of immense hardship that forced the country to confront its economic vulnerabilities. But it also laid the groundwork for a more resilient and market-oriented economy, setting the stage for Russia's recovery in the years that followed. If you found this video informative, please subscribe and turn on notifications for more videos like this. Thank you for watching, and I'll see you in the next one.